South African furniture retailer JD Group is now controlled by Steinhoff with just over 50% of the shares in issue. JD Group's operational brands include Bradlows, Joshua Doore, Morkels, Russells, Hi-Fi Corp and Incredible Connection. JD Group has a market cap of 9.3 billion rand, a price to earnings ratio of 10 and a dividend yield of 4.7%. Now, where do we stand with JD Group in comparison?
In comparison to Steinhoff?
Yeah, can we throw in that right up front?
It's not a manufacturer, it's a pure retailer. It's changed a little bit in the past year or so, with the acquisition of Unitrans Auto, because what they're doing there is taking their otherwise relatively lazy balance sheet and over time starting to gear it up and using those proceeds to finance people to buy, or should I say, rent motor cars on a 4-year view. That hasn't really kicked into gear yet, with the excuse of the pun, but it will. That's part of the deal. Also part of the deal is getting into the kind of low-cost fitment of housing in terms of the requirements for that type of thing. So I think they're showing a great deal of innovation and a great deal of flair. So it's not just traditional furniture. It's a lot of other things, but it's not manufacture, and that's where the big differentiation is between themselves and Steinhoff.
Well, now that we're clear on the differentiator, what do you feel about the value that's being offered from JD Group?
Yeah, look, they've got some good brands in there, some well-established brands with a great retail footprint. Incredible Connection you mentioned, Hi-Fi Corporation. Grattan Kirk, who's the guy running it, is an experienced person, and he's really a talented CEO. I like him a lot too. The addition of the businesses from Steinhoff, I think, are fine. And the fact that they've got this parent now in Steinhoff, I think, takes them out of the uncertainty of the past, where people wondered quite where they were going to end up. I think it's good that there's a new generation of management. I think that was a little overdue. Clearly, this is a business which is built in part on credit, and therefore the quality of the book needs to be looked at. But after a couple of tough years, I think JD Group is quite well poised now.
What would be the kicker for you right now in terms of JD Group if you were to make the investment decision into a buy decision?
I think it would be a sustained track record of gradually improving earnings, because they've been through the mill in recent years. They had a couple of tax issues a couple of years ago. That's out of the way. All of that stuff is now gone. But I think what the market needs now is reassurance that they are on sustainably the right track. And I firmly believe that they are.
Is that because of Grattan Kirk and a safe pair of hands, would you say?
Partly Grattan Kirk, but it's also the executive chairman, David Sussman. He has been tireless in getting this thing back on track. Yes, they made a few mistakes, make no mistake. But I think they've learned their lesson the hard way, and they're, as I say, in my opinion, because of a variety of reasons, they're back on track.
Well, isn't this a turnaround story? Isn't that reason enough to actually invest in the stock?
There's been a big boom in unsecured lending in the fourth quarter last year, and a lot of people got worried about that. Apparently, the most recent stats show that that's not quite as pronounced as expected. So people have calmed down a little bit. But understand, as far as unsecured lending is concerned, you've got the big players like African Bank and Capitec. Then you've got the big banks who are all trying to get into this area because it looks good in terms of their return on equity. And then you've got the non-bank lenders, of which someone like JD Group is one, but there are a whole lot of others. So there's a lot of credit being pushed out into the market, bit of anxiety about where it's all going and whether any of it's going to come back. So I think there are a bit of some issues there. And my own sense of it is that there are other players in this space that are in a slightly better position.
Chris, talk us through what's happening on the share price perspective here with JD Group.
It's been bumbling along in this kind of strange, it's been languishing, in fact, for quite some time now. As I say, I think the institutional market particularly needs reassurance that the earnings improvement that we've seen recently is sustainable. But it really has done very, very little, and it's been very disappointing.
Couldn't it be a similar story to an Able Ellerings, where we have potentially this as a take-out target for a microlender? Maybe Capitec says, listen, that model's working for Able, perhaps we should investigate it. No-go area?
That rumour's been doing the rounds for a long time, and I've spoken to management about it. They deny it vehemently, but
But my sense is that it's not going to happen because Steinhoff wants this asset wants this distribution channel and owns 50% of the shares. So they're really going to block anything. But it's interesting you draw the comparison, because African Bank went into Ellerines in order precisely to own the point at which creditors existed and creditors issued, and then they stripped out the furniture trading side of it. Whereas JD Group, looked at it together, they put it apart, they changed the management structure and so on and so forth. Clearly, you've got to make money on both, the trading, the buying and the selling of the products, and get that right. But you've also got to have good pricing and good systems and good technology in order to make sure you make money at the right rate and lend money to the right people.
Well, you've got your concerns, hot or not, Mr. Gilmour, on JD Group?
I've been hot on JD Group for a long time. I still think it's hot.
Hot or not?
I'm going to say not, because at this point in the cycle, there are some others I prefer.